Warren Buffett, one of the greatest investors of all time, once made $1 million bet saying that a simple low-cost index fund would outperform the best hedge fund managers in the world. No fancy strategies, no being smart and picking individual stocks, just steady long-term investing into a boring low-cost index fund. That's it. And guess what? He won that bet. Buffett's low-cost index fund approach returned a whopping 125% over 10 years, while the hedge funds only returned 36%. He didn't just win, he more than tripled the returns of these actively managed hedge funds, which was insane considering that these hedge funds were actually run by professionals with all the tools and experience in the world. But here's the thing, the bet made by Warren Buffett wasn't just about him winning the bet. It was more of a lesson for all of us. You don't need complex strategies when it comes to investing, and you don't need to pay high fees to fund managers in order for you to get high returns. All you need is the right investment approach, the kind that you buy, hold and trust for the long term. And that is where ETFs come in. Now, if you haven't heard about ETFs before, don't worry, they're actually pretty simple. ETF stands for Exchange Traded Funds. Think of it like a basket of stocks. Instead of just picking one company to invest in and hoping that it does well, what you're essentially doing is you're buying a basket of companies all in one go. It's like when you go to the supermarket just to buy chocolates. I don't know why you would go to the supermarket just for chocolates, but think of these chocolates like individual companies. For example, this Kit Kat is Nvidia, this Cadbury is Microsoft, and this Kinder Bueno is Tesla. Instead of figuring out which chocolates is going to taste the best, you can just buy all of these little small pieces of chocolates all in one bundle. And this bundle is what is known as an ETF. And every ETF has a price attached to it. When you buy an ETF, you're essentially owning a tiny slice of every company's inside of that bundle. I hope the analogy made sense because I am now stuck with a lot of chocolates. Now, you can buy these ETFs just like how you would buy stocks on the stock market. My favorite place to buy ETFs and stocks are on Moomoo. And if you haven't signed up to Moomoo yet, you can sign up using my promo link and code. If you use my promo link and code, you guys will get 100 ringgit if you deposit a minimum of 1,000 ringgit into your Moomoo account. And if you deposit more than 1,000 ringgit, you guys will get some free shares from Moomoo. And for all of my Roti Tolo fams, if you go onto your Moomoo app and search exclusive deposits and click join now, and if you deposit any amount using my code RF88, you guys will get an extra 40 ringgit into your Moomoo account, which you guys can use to buy more stocks. I'll leave this promo link and code in the description down below for you guys to sign up. It really helps support the channel, and I really appreciate you guys. Thank you. Alright, so now that you know what an ETF is and how to get started, let me show you my top 5 favorite ETF to invest in and own for life. A quick disclaimer before we begin, I just want to say that everything that you see and hear in this video is not financial advice. These are just my personal opinions, and please do your own research before investing. There are tons of ETFs out there, so please take your time to find an ETF that matches your own goals and also risk tolerance. These 5 ETFs which I'm about to share with you guys are simply my personal favorites, and I actually own all of them in my personal portfolio. With that being said, let's get into the first ETF on this list. Now, if I could own one ETF for the rest of my life, it will probably be this one, the Vanguard S&P 500 ETF, ticker symbol VOO. This ETF is the daddy of all ETFs, and this ETF basically tracks the S&P 500 index, which is made up of the top 500 largest and most successful companies in the United States. We're talking about huge companies like Apple, Microsoft, Google, and even value-based companies like Coca-Cola, Procter & Gamble, and also Johnson & Johnson. So instead of betting in just one company to win, you're essentially buying a slice of all 500 companies in the United States all in one go, giving you that instant diversification across finance, tech, healthcare, consumer staples, and many more. Historically, the S&P 500 has delivered about 8 to 10% annually over the long run. Compare that to our KWSP, which is netting us about 5 to 6% a year, which is not bad, but VOO has consistently outperformed that, and that is before you even factoring in compounding over the years. Now, for all of that performance, the cost to own VOO is insanely low. The expense ratio for VOO is about 0.03%, meaning for every 10,000 ringgit you invest into VOO, you only pay about 3 ringgit in fees per year. That's way way cheaper than most unit trusts and actively managed funds out there, which charges about 1 to 2% per year, and they often don't even beat the market. Plus, VOO is managed by Vanguard, one of the most trusted and investor-friendly fund managers in the world. So if you're looking long-term, a set it and forget it type of investment, VOO gives you that global exposure, especially into the US economy. VOO is one of the best ETFs you can actually own. Like I said, if I have only one ETF to invest in for the rest of my life, it will probably be this one. Alright, next up on my list is the Vanguard Growth ETF, ticker symbol VUG. If VOO is the steady, all-rounder type of ETF, then VUG is the younger, faster, and more aggressive kind of sibling. This ETF purely focuses on growth companies, and these are businesses that are expected to grow revenue and profits faster than average. We're talking about the future of our economy with companies like Apple, Microsoft, Nvidia, Amazon, and even Tesla. Unlike value companies, which is stable and slower growing, growth companies tend to reinvest all of their profits back into the company for innovation and expansion rather than paying their shareholders dividends. That means you might not see a big cash payout today, but over the long run, these are the companies that have a massive upside potential. If you believe in the future of technology, AI, cloud computing, and innovation in general, then VUG gives you a direct exposure to that. And just like VOO, VUG is super low cost with an expense ratio of 0.04%, meaning for every 10,000 ringgit you invest into VUG, you only pay 4 ringgit in fees per year. That's honestly nothing, especially considering that you're actually investing into the companies that are going to be shaping the next decade. Over the past 10 years, VUG has even outperformed the S&P 500 index with a return of 12 to 4% per year. That is even more than double of what EPF and even some fixed deposits pay us. Of course, with higher potential returns comes with a little bit more volatility. So this ETF is basically suited for people with longer time of horizon for investing, as well as a higher risk appetite. Personally, I love having VUG in my portfolio because it gives me a strong position in the growth engine of the global economy. If you're young, optimistic about tech and the future, and if you're investing for the long term, this is one ETF that you want to seriously consider. Now let's move on to the third ETF on this list, which is the Vanguard Small Cap ETF, ticker symbol VB. If the first two ETF on this list were about the giants in the market, then VB is all about the underdogs. The small but mighty companies that are flying under the radar today but could potentially be tomorrow's biggest winners. Small cap companies are typically younger, faster growing businesses with a lot of potential. They may not be household names yet, but many of today's giants like Apple, Netflix, Amazon all used to start out as a small cap stock. And investing into an ETF like VB gives you access to thousands of these smaller companies across various industries in the United States, from tech startups to niche manufacturers and healthcare innovators. Now yes, small cap stocks are a little bit more volatile, meaning they can actually go up and they can go down a lot, but historically over the long term, small cap stocks have actually outperformed large cap stocks like the ones in the S&P 500. So by adding an ETF like VB into your portfolio, you're essentially tapping into a high growth potential while staying diversified. And again, the fees to own VB is insanely low. The expense ratio of VB is about 0.05%, which is honestly peanuts compared to the most actively managed small cap stocks, which usually charge more than 1%. You're getting broad exposure to the US small cap market with just one ETF without the hassle of finding and picking the next big winner. So while VOO gives you the giants, VUG gives you the growth, VB gives you exposure to the next generation of companies that are just getting started. It's a great way to round off your portfolio if you're thinking long term and want to capture a bit of that upside. Alright, now for the fourth ETF on this list. This one is a little bit more niche, but I personally think it's super exciting. It's the iShares Cybersecurity and Tech ETF, ticker symbol IHAK, also known as iHack. Now, unlike ETFs like VOO and VUG, which are broad and diversified, iHack specifically focuses on one explosive sector, which is cybersecurity and advanced tech. In a world where everything is going from digital, from banking to healthcare to national infrastructure, cybersecurity is no longer optional. it's essential. And this iHack ETF gives you direct exposure to companies that are defending against the digital world. Inside iHack, you'll find top names like Palo Alto Networks, CrowdStrike, Fortinet, Okta, and Scalar, which are companies that build the software and system protecting data, networks, and also users. As cyber threats keeps on growing, the demand for the services is expected to skyrocket, and that means massive growth potential. Yes, it's a higher risk, higher reward kind of play if you were to compare this to like VOO, for example, but this is sector concentrated. But that also means if this sector were to do well, it can really take off. Over the last few years, cybersecurity stocks have outperformed many other tech stocks, especially as global companies ramp up their security budgets. This iHack ETF, however, has a slightly higher expense ratio of 0.47%. Yes, it's a little higher than VOO and VUG, but fair considering that this is a specialized thematic ETF. You're paying for the targeted exposure to a booming sector. For me, iHack adds a layer of future-focused growth onto my portfolio, and it's like betting not just on tech, but on the digital safety of the entire world. That is a trend that I believe will only get stronger over time. And the last ETF on my list is a little bit boring, but in a good way. It's the Vanguard Utilities ETF, ticker symbol VPU. Now I know what you're probably thinking, utilities, really? But hear me out. Utilities are the backbone of our daily life. These are companies that provide electricity, water, gas, and other essential services. The stuff people and businesses need no matter what's going on in the economy. Whether the market is booming or the market is crashing, people still need to turn on their lights and flush the toilets. That's what makes utility stocks really stable. VPU holds big names like NextEra Energy, Duke Energy, and Southern Company. These companies generate consistent cash flow and many of them pay solid dividends. So while this ETF might not shoot to the moon like growth stocks or other small cap stocks, this ETF brings defensive play to your portfolio. And that's incredibly valuable, especially during market downturns. Over the long term, VPU has delivered about 7% annually with a much lower volatility compared to other growth ETFs. And the best part, the cost to own this ETF is extremely low as well, with an expense ratio of 0.1%. I like to think VPU as my anchor to my portfolio. It's not flashy, it's not exciting, but it holds up especially when the market is shaky. If you're building a long-term balanced ETF portfolio, having something like VPU in your portfolio can really help smoothen the ride. So there you have it, 5 ETFs that I believe are worth owning for the long term. The best part, every time I buy these ETFs, I buy them with the intention of holding on for my entire life. Until today, I never once sold any of the ETFs that I've bought. That is how much I believe in long-term investing and how I let time and compounding do its magic. Also, one more thing, I never try to time the market. I use the dollar cost averaging approach whenever I buy my ETFs. This just means that every month at a set date, I would just buy my ETF regardless of the price of the ETF. Whether the market is up or whether the market is down, I would consistently buy this ETF every single month. To me, investing is like going to the gym. You don't expect results after just going to the gym just one time, right? But if you keep showing up, you're going to see those gains. Same thing with ETFs and investing. As long as you stay consistent and you stay disciplined with your investments, you're going to see results. And just to be clear, this video is not financial advice. I'm just sharing what works for me and what ETFs that I personally believe in. There are tons of ETFs out there, so make sure you do your own research before investing in any of them. And if you're looking for a platform to invest in ETFs or buy some stocks, you can check out Moomoo. I personally use Moomoo for all of my investments. If you haven't signed up to Moomoo yet, you can sign up using my promo link and code RF88. If you sign up using my promo link or code, you guys will get 100 ringgit if you deposit a minimum of 1000 ringgit into your Moomoo account. And if you deposit more than 1000 ringgit, you guys will get some free shares as well. And for all of my Roti Tolo fams, if you go onto the app and search exclusive deposits and click join now and deposit any amount using my code RF88, you guys will get an extra 40 ringgit cash coupon which you guys can use to buy some stocks. Anyways, I will leave all this link and promo code in the description down below for you guys to sign up. So make sure to use the link if you're signing up to Moomoo. Anyways guys, thank you guys for watching. Hope you guys have a great rest of your day. Stay safe, stay healthy, and I'll see you guys on the next one. Ciao, peace.